President Trump's tariff plans take a major hit. A panel of judges ruled that the president overstepped his authority when he used emergency law to impose tariffs across the board. Markets have cheered the ruling, but is their reaction justified? Well, Chris Beauchamp is Chief Market Analyst at IG. Chris, aren't the markets right to be buoyed by this ruling? Does it really mean that the tariff threat has completely gone away?
It's certainly not gone away completely. I think it's understandable that people are cheered by this news because it will make the administration's job a lot harder to impose these tariffs. But as others have pointed out today, there are other ways that this can be done. They're just a bit more drawn out. So I suppose in one sense, it's almost a worse outcome because it means that we face just more uncertainty and more difficult times ahead as they try to find new ways to impose tariffs. And of course, the administration is going to appeal this ruling. So we aren't done by any stretch of the imagination on the tariff front yet.
Now, the big news overnight on the corporate front was Nvidia and its results. Markets liked what they heard, but are you surprised by the positive reaction?
No, not really. I think this is still a market that is very keen. It's very keen for any kind of positive news, and Nvidia's results it's just confirmed the fact that it's not just a company that's driven by China. It has to be said. There's strong AI demand across the board, so it's a very solid set of numbers. And I think it will just mean that investors continue to pile back into these stocks. They were so sort of panicked out of them in April, really, that the flows have yet to recover entirely. And I think with these results, it's another confirmation that there is plenty of more juice left in Nvidia for further upside.
So with Nvidia's results, we've now heard from most of the big players during results seasons. What's your overall assessment of what you've heard so far?
Well, it's been a very good season overall. Most companies, obviously, the vast majority have beaten estimates. The earnings growth has been very solid. Overall, the key thing to remember, of course, is that this is all just what happened before April and tariff liberation day. And of course, since then, a lot has happened, an awful lot of water under the bridge over the last 2 months. But I think it's almost this was a free pass earnings season, really. All you got was the hints about what might come in terms of the impact of tariffs. It might be delayed even again. I suppose the problem for investors is because Q2 will see the imposition of tariffs, but then the flip-flopping around those tariffs. So maybe we don't get a fuller picture even in the next reporting season. So it could be a bit of a tough time for investors before they actually get some clarity. That said, I think the market is still seizing on any and all evidence of good news to push stocks higher.
The Fed also released minutes on Wednesday. There was a big warning on unemployment and inflation risks. What does that tell us about their thinking when it comes to future rate decisions?
I think it tells us that the Fed finds itself in a very difficult position. They're clearly unwilling to risk the recovery overall by tightening too soon. But there's a realization, if you like, that they will have to reluctantly move against inflation if it strengthens. But the warnings are there that the US economy is now facing a much rockier patch than had been the case. And that while the Fed obviously stands to respond, it might find itself pulled in two different directions if you get the dreaded stagflation. So, and of course, the other problem is that it faces a difficult tightrope in trying not to antagonize the administration. It really is a very tricky time for the Fed, and I think it will be very interesting to watch how policy evolves over the next couple of meetings, really.
That was Chris Beauchamp from IG. And don't forget, you can watch more videos on Reuters.com.